Before you decide to buy Didi stock, I'm going to share a few things you need to know so that you can make a smarter decision. Welcome back to the channel. I know what a lot of you guys are thinking, because what you are thinking right now is probably what many are thinking as well, that is buying the dip. Now this dip has been really fascinating because as soon as Didi, the Uber of China, IPO'd for less than a week, they immediately ran into a crackdown. Now what we are talking about is a potential breach of China national security. So what does that really mean? How bad will this impact them? And is Didi still a buy with all that being said? So let's backtrack a little bit back before Didi IPO'd. Back then in May 2021, Didi and the other leaders were under investigation by China's antitrust regulators. More specifically, China is trying to crack down on the local big tech firms, largely to curb their growing influence and to promote the growth of smaller tech companies. Just to give you a clearer idea, Didi alone in China account for 88% of the total trips in the fourth quarter of 2020. That's how massive they actually are. Interestingly, this crackdown punishment could be traced all the way back then in November 2020 when China decided to block and pull out the Ant Group listing in Hong Kong. Then soon after, in April 2021, Alibaba was also hit with a punishment record of $2.8 billion fine after an antitrust probe found that they had abused its market dominance. Now some of you guys might be wondering, is Didi dumb enough to not foresee the possibility of this antitrust probe? Well, you're going to be surprised with what I found next. According to the Wall Street Journal, citing people familiar with this matter, it was reported that the Chinese government actually asked people to postpone its US listing to review its network security before it went public. But the next thing we know, 2 days after the IPO, regulators said Didi had committed serious violations in the collection and usage of personal information and ordered the app takedown, as well as 25 more apps associated with them, hence preventing new Didi users from signing up, leaving traders wondering how far the action will go, worse or better from here. Now that then sparks the golden question, is Didi stock a buy with all this crazy narrative going on? For that, we need to think about how serious it will impact their future earning. In terms of the severity in the scale of 1 being good and 5 being bad, I'll rate this 4 out of 5. Here's the problem. Ad removal is a very big deal, especially for Didi as their services rely heavily on the app usage. If you remember the removal of Fortnite from Apple App Store, this is how much it has impacted them. They are literally losing $50 million monthly income. And honestly, I don't see how Didi will be any different from this. On top of that, there's no telling what will happen next for Didi. Will their services be permanently removed? How does the temporary app removal affect their growth rate given that Didi is valued as a growth company? Until we have answers to all these questions, I personally think that it will be best to avoid Didi for now. Surely it is likely that we will see a rebound here and now in the short term, but if you're in this for the long run, I think it is best to wait until Didi manage to resolve the issues. I have to say that the timing of all this happening is also seriously questionable. According to analysts, they speculated that the motivation behind the crackdown on Didi was in retaliation for listing in the shares in the US instead of a Chinese exchange. So if you think about it, we cannot be too sure how much further pressure will the Chinese government put on Didi in the near term. Overall, to sum it up in 3 simple points: 1. We don't know how long this China crackdown will take. 2. Growth for Didi moving forward is not looking good and I cannot find any reason to take the risk. 3. Why take the risk and invest in Didi? I believe you are better off investing in other undervalued Chinese companies like Alibaba or Tencent. Of course, top Chinese companies like Alibaba, Tencent, JD and Baidu have been on a continuous downtrend over similar investigation on illegal monopoly practice. The point is, how would Didi be any different from this Chinese company? The trend and the price action has been really similar. Anyone who's telling you otherwise is either crazy or seeing something that I probably do not see. After all, we don't want to be investing in the wrong company at the wrong time, right? With that said, if Didi can ever overcome the app problem, I'll be more than happy to buy Didi stock given the attractive valuation in the social ride sharing space. Well, that's all I have for this video. Hope you guys enjoyed the video. Remember to hit the thumbs up button and subscribe for more videos like this. Till next time.